Alright, welcome back to Precise Algorithm Trading. It is Monday, November 13th, 2023, and let's start here with our automated trading systems and what they did today and what they look like really for the last 6 months. Over the weekend, I draw these out to where they're about a year's worth of data or even a little bit more, and you can see the whole equity curve. So this is the result of our trading, not like, it's not a chart of what the Dow futures are doing. It's a chart of what our results were doing. So I've had a little bit of a pullback situation lately in what I'm going to call sideways equity action. So this basically, in order, well, you can see there was some sideways there before we got a nice little pop, and then we got a drawdown. You get some sideways action down here before you get a pop. So we're looking for that pop to happen anytime, really. So in the long run, this is what the latest trading looks like. So today was 11:13. We had 3 trades, uh, 2 losers, 1 winner. The winner wasn't very big, and what we're really looking for now is some runners like these. So get some winners in a row, and it'd be really nice to see for a change in this one. But when it does happen, it tends to happen like in a series. So this is our. Oops, jumped ahead. Let's jump to here. The Russell. So the Russell had one little tick. This one doesn't trade as often as the other ones. But again, when we get a nice pop, it's usually pretty big like that. So, and we've been in a drawdown lately. So here's what the Russell's doing. And today we had one trade. It was just a little one, and is what it is. So we're due for a nice size trade one of these days. Nice size winner, I would hope. And anyways, we'll see where that goes. Then the last one here, I did some work over the weekend and basically eliminated some trades. And when you eliminate trades and keep the same equity curve, that's basically you're not paying as many commissions. And actually, this ended up having less drawdown right here. So it's the same math as before. It just literally, if there was 1 or 2 conditions that didn't get met, um, or that used to get met, now this is a little bit more constrained. But in the long run, this is the same equity curve, just with better parameters. These 2 pullbacks instead of the one big one that we had, if you remember that one. So that's pretty. It's great when something like that works out, and that's where we're at. So, anyways, it's always good when you can reduce your commissions and your costs. And so today's trading literally started down here. This thing still trades a lot as far as the compared to the other ones. So that's one negative trade. Then we had a series of negative trades, but we had some decent winners there in the middle. So that is what it is. Like I said, at the end of the day, we're looking for a rising equity curve that slopes from the lower left to the upper right. That's our automated trading systems. And now let's move to the general markets. So this is Thinkorswim, and this is the S&P 500, and we've been coming up off this bottom. We had a little pullback. That's the T line right there, or the 8-period moving average, and we've continued to pop up. I did take the Bollinger Bands off of here. They right. Actually, I left the 2-period 2 ATR Keltner channels on here, but reason being, well, the Bollinger Bands were just noisy, but I can turn them back on. But anyways, I wanted to have this on here really because it's my long and short stop, generally speaking. So, anyways, we're above the 2 ATR, and I am going to turn that back on real quick. Oh, no, it's not in there. Sorry. Um, anyways, if we had the Bollinger Bands on here, I think they'd be right about here, and I'm expecting them to really hit resistance there before we get a pullback into this zone right here. So, okay, so that's the S&P. It advanced a little today, but really very little. This doesn't look like a topping candle though. The industrials, same kind of a thing. Small advance. Actually, the S&P went down a little bit, but again, we got just a small bodied candle. The Russell went up just a little bit today. Nothing to write home about. Although the Russell, if it gets up and going, could actually help prop this market up. The NASDAQ actually pulled back. Yeah, I think I'm going to probably go ahead and add the Bollinger Bands back onto this chart just for review. So, and the IYT, which is the transports, walking sideways. So I'm expecting them to really get a pop here too. Probably run into some resistance at these lines, and then give us a pullback, which could be a buying opportunity. And then oil, I think, popped at 1 or 2% today, depending on which instrument you're looking at. Off the bottom, and it's looking. I mean, it's coming off the ATR trailing stop on the weekly chart, but this candle is just getting started because it's only Monday, so you can't take that to the bank. And all right, so that's enough for the overall markets. Let's flip to stockcharts.com. And some people call these the internals of the market. I guess I'll buy that because it's kind of like what's happening under the hood. It's kind of like a measure of bullishness or bearishness or neutral, neutrality, I guess. So the industrials didn't move today, but they are on a big column of X's, and the NYA went up by 0.69% today, so not a lot, but they are also on a column of X's. That other one was on a point and figure buy signal. This is not. The transports, same thing, they're in a column of X's, not in a point and figure buy signal, and they didn't move today. The NASDAQ in a column of X's went up by 0.73%, not in a point and figure buy signal. The SPX, this is a point and figure buy signal, and it went up by 2.16% today. So continued strength, basically, under the hood. What else the OEX added a new X today, up by 2.04%. And the NDX up by 5.36%, and this is also a point and figure buy signal. So generally speaking, we're seeing the strength under the hood, and we're seeing the strength in the markets, and that's a good reason why the markets aren't just rolling over. I was also going to show this, which, let's go back to this. That's oil. You can see oil coming up off the bottom, and how these instruments respect these average true range, average true ranges, I guess. The Keltner channels is what they are, but they're showing literally the average true ranges off of price. And so let's go to SPX for kind of a look at the overall market. So we're up here at this is 1 average true range, 2 and 3 to the upside, and then 1, 2, and 3 to the downside. And you can see when we came down, we bounced off of right off of almost to the tick, it looks like, of the 3 ATR. And you can see it doesn't always happen. Sometimes you go through it and then you come back up. But the reason I really wanted to pull this up is because if we go back on the chart after a new fresh breakout to the upside, what does that normally do? And this one came up, didn't touch the upper channel, and then pulled back and walked sideways, and then that's what this ATR trailing stops for. If you look here, it's really similar here, and we could just walk sideways, and we're not at the upper band yet. And we could go sideways and get up to the upper band. Usually when you break up to the band, we'll start to go, we'll either reject off of it or we'll go right up through it like this and then reject off of it. So that's why we take this thing a day at a time. It's literally, if you're long, there's no reason to really get short, and there could be a reason here to take profit just to protect it, or you could set a stop underneath each one of these candles as you're going higher, and eventually it'll stop out. So, alright, that's my lesson for today, and I think that's enough for tonight. So we'll talk to you guys later. Have a great night, and good luck trading tomorrow.